Kia ora everyone, and welcome to today's session, End of Financial Year Done Right, a smart approach to our payroll, HR and compliance. While we actually wait for some of the registrants to come through, we thought we'd actually get to know a bit more about what you're least looking forward to at the end of the financial year rolls around. So what we're going to do now is give you a little poll and see what you find as your least favourite thing. So what is it? Is it sorting your financial records and paperwork, or is it understanding changes and requirements, fear of making mistakes and penalties, or exporting data from multiple systems that don't speak to each other? So take a moment and vote on what you think is your least favourite thing. I can see we've got some numbers coming through there steadily on the poll. For those of you that have just hopped on, we're just doing a quick icebreaker poll. Want to know what you're least looking forward to at the end of the financial year. I know which one I would pick. Okay. Right. So hopefully we've all had a chance to have a wee vote on that, and I can see that our attendees have come through on that there, which is fantastic. So here are my results to that poll. So really, really interesting, and understanding changes and requirements was the highest one there. So it's great to see that. And then following close behind was, of course, the fear of making mistakes and penalties here. So yeah, mine would have been the fear of making mistakes, and I'm sure a lot of you agree on that one. Okay, so let's with that, let's get into it now. So hi everyone, thanks for dialing in there. My name is Nerida and I'm a customer trainer here at Employment Hero, and I'm joined by one of my colleagues, Izzy, who is our HR implementations consultant at Employment Hero. And we're going to be taking you through this session today. Before we do, let's talk a bit about housekeeping to make sure that we all understand how this works. So at the bottom of your screen, you'll see there's a Q&A button there, and this is where you can submit all those burning questions that you have. We can allocate time at the end of the session for those questions, and we'll do our best to answer as many as we can live. We also have our lovely Shelley, who is in the background as a product owner here at Employment Hero, and she's going to be helping answer some of those bulky questions throughout the session. So please take the time to put the questions in there for the Q&A. Now, just a bit of a disclaimer here, just a quick one. The views here are our views, and we provide these with good faith. So we do recommend, if you need it, to get expert advice on anything, but we are giving this in good faith today. So in today's session, we'll walk you through the key steps to close out that financial year efficiently and hopefully help you navigate what you least look forward to doing much more confidently. So let's look at the agenda. So we're going to look at our key end of financial year deadlines. We'll look at our best practice for recording, for payroll recording and HR recording. We're going to look at the admin through systems. We're going to look at common mistakes and practical work tips here. And then, as mentioned, the live and interactive Q&A at the end of the session. Okay, so we're going to start now with our key end of financial year deadlines and tasks. So the first one is the task to finalise our payroll. So as you approach the end of year, please remember that payroll reporting is based on your pay date, not the days worked. So to ensure your records are accurate, your pay run is the last one with the pay date before the 31st of March. So for example, If your work week is Monday to Sunday and you pay on a Wednesday, your final pay run would be the 16th of March to the 22nd of March, because the actual pay date lands on the 25th of March. That would actually be your final one for the year, because the next pay date would be after the 1st of April, which should be then recorded in the new financial year. Make sure you've approved and submitted all those expense claims. Complete all final checks to ensure everything is correct, and run that reconciliation report to check that what's gone through your payroll is what you've actually reported to the IRD as well. Make sure all the pay runs have been filed to the IRD as well, so that that's gone through, and review all upcoming changes to your payroll and KiwiSaver. So with those, then we've got our employment rate updates. So firstly, we've got the increase to the minimum adult wage. It is going from the $23.50 now to $23.95. And the starting out and training minimum wage is actually increasing as well, from your $18.80 to your $19.16 per hour. Now, this is probably where most of you are focused on, is the changes to your KiwiSaver. So as of the 1st of April, there will be changes here, and that's increasing from your 3.5, it's increasing to 3.5, and is now eligible for those 16 to 17-year-olds. So what I want to do here is actually just give you a little bit of an update on what the system is going to do from Employment Heroes, so that you're aware of what will happen. So for anyone that has gone through and gone to the IRD and got approved rate reductions, we've added a little tick box both in your payroll and your HR KiwiSaver screens that says rate reduction here. So how it works, you tick this box and you enter the dates from and to as specified on that IRD letter. The result then, this will automatically set both the employee and employee's rate, keeping it at 3%. And you can obviously choose to manually override that if you choose, but it will automatically keep that default as 3% for that rate of that letter. As of the 1st of April, for anyone else that you haven't got that rate reductions option available, on the night of the 31st of March, we'll automatically update all 3% contributions to 3.5%, and obviously excluding those rate reduction ones. This ensures the new rates are going to be visible from the moment you log in on the 1st of April. Now, remember that payday rule applies to KiwiSaver as well, which means based on that pay date, not the dates worked. So if you've got that example that I talked about before, where you have a pay run that has some days in March because it's paid in April, all that entire pay will be at 3.5%. So automatically starts on any pay date after the 1st of April. Any pay date before the 1st of April will remain at that 3%. Now, just a little bit of a tip here. We do recommend that you run your employee superannuation contribution rate report and check to display that the rate is what you expect to see there, especially around, keep an eye on those rate reductions. Okay, so what are our key IRD submission dates? So just a quick reminder on these IRD dates. Now, some of these on the screen have already happened, so I'm going to focus on the ones that are yet to come. So if you file twice a month, you're going to be filing on the 16th and 16th to the 28th of February, will be due on the 5th of March. And the 1st to the 15th of March will be due on the 20th of March. For those monthly companies, the 1st to the 28th of February will be due on the 20th of March. So no matter when you pay the IRD, your year end is still the 31st of March. So we're all there together. Okay, so just a reminder, just so that we remember. So remember, the minimum wage will increase. The default KiwiSaver rate increases, which we will do for you on the night of the 31st. And that's it. Your payroll is ready for the new year. So I'm going to now pass over to Izzy, who's going to take us through some HR updates. Are you there, Izzy?
Yes, hello. Yeah, hi, my name's Izzy. I work here, employment here as an implementations consultant. We're running through some of the HR tips and tricks. I hope everyone can hear me okay. Cool, let's move on to the next slide. So yeah, firstly, one of the best and most important tips that we have as we move into the end of the financial year is to do some cleaning the decks, really. At a minimum, verify that email and postal addresses are up to date, and more importantly, double check tax codes. Outdated codes are a common end of financial year pitfall that result in incorrect deductions. So also ensure you have a copy of all of your employee information and KiwiSaver contributions or deductions for the full tax year. Moving on, checking visa statuses. So ensure anyone on a temporary visa, for example, is correctly marked in the system to remain compliant with employment obligations. Also ensuring you have employment agreements for all employees that accurately reflect their current employment. And you can file that safely, so you can use our reporting functions on Employment Hero and CSV downloads to retrieve this data. So yeah, also with compliance now. So compliance, as you know, it's not just a tick box, it's the foundation of your business resilience. And we believe that end of financial year is a perfect time for a health check. So what's important here is ensuring all of your internal HR policies are up to date and crucially signed by the relevant employees. With the new employment leave bill on the horizon and public submissions opening now, it's a perfect time to audit your current leave entitlements against industry standards. It is also recommended to keep a close eye on Employment New Zealand for any upcoming legislative changes that might impact the industry in the 26-27 period. And yeah, being proactive prevents compliance issues that occur when contracts and procedures are out of date. So don't forget to confirm that any payroll setting changes, like as Nerida mentioned, the new ESCT thresholds are accurately reflected in your HR records. Cool. So really the heart of HR. So end of financial year is a natural time to reflect and pause on your people. So using this period to measure company-wide alignment. So for example, look at your company goals. Do they align with your company, team, and individual priorities? So at Employment Hero, we recommend using the engagement module to perform an analysis of employee happiness and turnover. We've seen that in 2026, workers are placing a massive premium on flexibility and development. So use this time to reflect on your people management goals. Are you offering the growth opportunities needed to keep your top talent from looking elsewhere? So using these goals, you can then measure company-wide alignment of goals and set new ones for the next financial year. And you can do that in platform using our goals feature. Top tip here is that these goals can also flow into individual performance reviews as well. So preparing for the new year ahead, you can start here by preparing for upcoming performance reviews. So reviewing outstanding performance management issues and using this data to identify candidates for internal promotions. So when looking at the company structure for the year ahead, identify and plan for new roles and evaluate if current onboarding and recruitment strategies are strong enough to support your growth. We also have a great built-in workforce planning tool that can highlight gaps in your organization structure. So really here, like reviewing goals and setting new ones now, businesses such as yourselves can ensure that every team member knows exactly what they are aiming for in the next financial year. 2026, we're seeing significant salary pressures as well and increased investment in AI. So when building your budgets, you must factor in the confirmed cost increases effective 1st April, as Nerida mentioned, minimum wage is rising and the KiwiSaver default rates. So what that means is that your payroll related costs will jump. So this is a great time to review your remuneration framework now, and especially for roles clustered around the minimum wage. So it's important to look at those to maintain internal equity. It's a great time to identify and plan for new roles or consider internal promotions rather than relying solely on external recruitment. And again, we have great reporting functions such as turnover reports and also a 9 talent grid for executive level alignment on people trajectory. So finally, as mentioned, harness the power of AI. For instance, our recruitment agent can support you in building roles, and our talent search AI can help you connect standout candidates to your businesses based on real-time skills and market data, which of course will save you precious recruitment budget. So automating these administrative tasks mentioned above frees you up to focus on the real strategic heart of HR. Cool. So we'll move on as well. What's important next will be integrated systems. Perfect. So we've touched upon this briefly. And indeed, when we talk about connected systems here, we aren't just talking about software, talking to software. We're talking about giving the business's owner or HR managers a single place to look, a single source of truth. So if you have to log into 3 different places to check on one employee status, that's where all these errors creep in. So with integrated systems, it's about making sure you only have one place to look and at that once. And really, how does that apply at Employment Hero? So changes, for example, you can make these changes to employee data in HR, and that will sync over instantaneously to payroll. We can update policies and contracts with new updates to the Holiday Act entitlement. So you can simply clone and reuse our Employment Hero templates. And again, everything is stored digitally in one system, so you don't have to remember in what device or which cloud somewhere something is stored. Cool. And we even have further capabilities in Employment Hero. We can make even more streamlined for you additional HR advisory support to provide expert advice on internal HR and people matters. We've got managed payroll, so our team can confidently process pay runs for you. And you'll soon receive a poll if you need our teams to reach out to you to discuss any of this further. Passing it back on to you, Nerida.
Thanks, Izzy, for that. So let's look at some common mistakes that happen and pitfalls. Okay. Right. Now let's go through some of those for when the end of the financial year comes round. So employee tax codes and KiwiSaver's not being up to date. So this is a really common one that obviously has pitfalls in there that happen. So remember to use those reports to check that everything is up to date. So I would use the employee superannuation contributions tax rate report and the payday filing report for your employees' details there. So this is just to make sure that everything is working right. So what is our tip here for our Employment Hero customers? Instead of the payroll manager guessing, send an all-staff memo on the 1st of March, asking your employees to actually check their tax code and KiwiSaver rate in the Employment Hero app there. So that's going to be a good thing for us to do. That saves you time and makes sure that they're responsible for updating information there. The other one here is any missing employee details. So a great tip here from our Employment Hero customers is to use the employment details report to spot anything that actually might be missing. So like dates of birth or IRD numbers, anything like that. So rely on the systems that aren't properly set up or reviewed. This leads to incorrect reporting. Izzy mentioned previously touched on this. If you have to log into 3 different places to check one employee's status, that's where errors start to creep in, right? So this is still something we're doing. It could be where the time to reevaluate the systems that you have and to make sure that we have better options suited for your business. So these are something that are really, really important there. And the last one I sort of really want to talk about is leaving the end of financial year preparation too late. So aim to have all that housekeeping done, address those updates, those tax codes changes, those expense reimbursements. Don't put it to the bottom of the pile. We all know what that's like. Finalise these by the 20th of March. Why? This gives you that clear 10-day window to handle that final pay scenarios. Any unexpected leave requests that always pop up in the last week or the last month. So really just take the time to really focus on those common pitfalls and get things done. Send out now a message to your employees to make sure that everything's up to date. Good time to also ask them to up to date any emergency contacts as well.
Great. Okay. Well, we will be wrapping up. So thank you again for joining us today. We hope you found the session valuable. So yeah, don't forget this webinar is recorded and will be shared to all attendees later this week, along with complimentary end of financial year resources. Thanks, everybody. See you next time.